Awesome. Good. Okay, so yeah, the first type of tax is the income tax. So the government takes a percentage of your income. The next one is a sales tax. Essentially, it's tax added on to pretty much anything. Types of sales tax. So the first one is the GST. So this is the federal sales tax, and it's imposed on purchases made in all provinces. Then you have the PST, provincial sales tax, and it varies from province to province in terms of what the rate is. And then you have HST. So this is a harmonized sales tax, and it essentially combines the two types of taxes, or PST and the GST. So in Ontario here, we have HST, so you'll see it's 13% there on your receipt. And then the last type of tax is corporate tax. So basically it's taxed income generated by a corporation. Okay, so we'll dive deeper into income tax. So the federal government taxes for citizenship, immigration services, national defense, and infrastructure. So in Canada, the income tax is based off of a progressive tax system. So it works in essentially chunks. And we'll provide you an example later on here, but essentially, if you're making income between $0 and $5, this is just an example here, but if you're making income between $0 and $5, you'd be taxed at 5%. And then anything after $5 from the 5 to 10 range would be at 10%, so on and so forth. We'll see an example later on. So as for the provincial government, they use the taxes for education services, energy, and healthcare. Okay, so here's an example of how the progressive tax system works. So in this example, we have $10 of income. Oops, sorry. I just showed the answer here, but so I don't know if you guys have calculators on you or whatnot there, but anyone like to take a guess on how much tax you would pay in this example, progressive tax system, $10 of income? 10%? Okay. The actual amount of taxes based on these rates, like 5%, 10%, how much would the total? Dollar?
55. 1.25.
What's the
What's that?
in what time this income is earned? 1 month or?
Oh, it's just 1 year, yeah. Just
1 year.
yeah, at the present time.
$1.
All right.
75 cents.
Oh, we got a 75 cents. Okay. So we're getting closer to the answer there. So the first step here is that because it's a progressive tax system, we have $10 here, right? So the first $0 to $5 is taxed at 5%. So that gives us 25 cents, right? The next $5 is taxed at 10%. Okay. So we have a total of 75. Perfect. Now it's probably going to make more than $10 in income a year, I would assume, but so the numbers will probably be higher.
Yeah, and the percentages are also a lot higher.
Yeah, the percentage of it.
It's not that low.
But yeah, this is just an example to provide you how the progressive tax system works. Okay, so taxable income is determined by taking your total income and subtracting any deductions that you qualify for. So total income minus deductions is your taxable income. So we'll dive a little bit into that. So tax deductions, as I mentioned, reduces your taxable income. So total income minus deductions is your taxable income. And then you have deductions, you have tax deductions, and then you have tax credits, okay? So tax credits reduces the amount of tax you pay to the government, okay? So deductions essentially kind of shows that you've deduced the amount of income that you've made in a year, whereas tax credits is, as we'll see, they're deducted from the amount of tax that you have to pay. So for tax credit, as I mentioned, you got our taxes owed minus the tax credit, and then that's the reduced amount of tax that you owe at the end. Okay. So, for example, if you have $8,000 in earnings, and we'll say a tax percentage 15%, then you'll owe $1,200, right? Without any deductions or credits, that's the initial number. Okay. So your 8,000 earnings minus tax deductions will reduce essentially the amount of earnings that you made in that year. So I don't know if anyone's familiar with like an RRSP or the newly created FHSA, First Home Savings Account, as well as the RRSP is a retirement savings plan. If you contribute money to these accounts, it essentially reduces your taxable income. So that would act as a deduction. That makes sense to everyone? Yeah. Okay. Now that we've determined that our the taxes that we owe is $1,200, then you would deduct from the tax credits. Okay, so there's different types of tax credits. Some everyone is eligible for. Some certain people are eligible for. But yeah, that reduces the amount of taxes. There are deductions that, as I mentioned, everyone's eligible for, and also deductions where only a select few people. I will pass it over to Tara.
Great. So the next section is about residency for tax purposes. So basically, this is basically talking about who has to pay tax in Canada. So it's based on residency. So we're going to get into what exactly residency means. So there's two different types of residence for tax purposes. The first is called jurisprudential. So this is basically any individual who's a resident of Canada by common law. That's pretty straightforward. And then there's also statutory residents. So these are people who have been in Canada during a year for more than 183 days. So this is basically, if you've been in Canada for more than half a year, then you're deemed to be a statutory resident. Well, going back to the first type of resident, the jurisprudential resident. So once again, you're considered a jurisprudential resident if you're considered a resident by common law. There's several factors that are taken into account to determine whether you're a resident by common law. So for instance, the location of your dwelling. So where do you live? If you live in Canada, that probably means you're going to be a jurisprudential resident. The location of your workplace or studies. So if you work in Canada, that's also going to make you more likely to be a jurisprudential resident. If you have family here, any other economic ties, so if you run businesses here, if you're part of any clubs or leisure activities. So the more things you can check off this list, the more likely it is the government is going to consider you a jurisprudential resident, which means you'll have to pay tax in Canada. So the other type of resident is the statutory resident. So this basically means if you're in Canada in any given year for 183 days or more, then you will be considered a statutory resident. So the reason why it's 183 days is that's simply just the number of days in a year divided by 2, so half a year. And it's non-cumulative, so if you're here for like 3 months and then you leave and then you come back for 4 months, well, you're still met the threshold and you're going to be considered a statutory resident. But here's a question for you. Is spending a single day in Canada enough to become a Canadian resident based on the concept of jurisprudential residency? I think the answer is that. The jurisprudential is the first one that I went over. It has nothing to do with the number of days. If you just spent 1 day. No, right? Yeah. So the answer is no. The number of days you spend in the country is irrelevant according to jurisprudential residency. Instead, you have to look at the 7 different factors here to determine whether or not you're a resident. Okay, so these are ways you can stop being a resident. So if you come here, you're like, you know what, these taxes are too high, I'm out of here. These are ways you can do it. So if you're a jurisprudential residency, you can cut ties with Canada or at any time during the year. And if so, you will become a non-resident at any point in the calendar year. For statutory residency, you simply have to spend less than 183 days in the country. And if that condition is met, then you will no longer be a resident. So let's say you are a resident. Let's say you meet one of the two criteria and you're a resident. So now the question is, what exactly you're going to be taxed on? Well, if you're a resident in Canada, you're actually going to be taxed on your whole worldwide income. So if you have businesses in other countries or any like rental properties in other countries, for instance, the Canadian government is going to tax that money in Canada at Canadian tax rates, in most cases. So, whereas if you're a non-resident, so let's say you have a Canadian citizenship, but you decide to go live and work in another country, you're only going to be taxed on employment income you earn in Canada. So the country that you're working in, the Canadian government will not touch that money. If you're earning any income from a business in Canada, you're still going to be taxed on that, as well as income earned by selling any of your assets in Canada. That'll still be taxed in Canada. Okay, so how to file your taxes. So nowadays, there's a lot of different software programs online which will allow you to file your taxes pretty easily. You don't really have to have any background in accounting. It's really self-explanatory and it'll guide you all the way through. And a lot of these are free to use if you're a student as well. Personally, I use TurboTax, but I've heard good things about Wealthsimple and QuickBooks as well. And there's a couple ones for Quebec taxes as well. So they're very helpful and they allow you to do your taxes pretty easily online. So like I said, usually they can be used for free, but there's some extra services they may charge you for. So if you want to review your tax slip in detail or get help from an expert, so if your tax situation is more complicated, you can get an expert to help you. Normally for students or young adults, our tax situations are pretty straightforward. So you're likely not going to need to pay extra for this, but it is available if you feel like you do need it. So these are some things you're going to need to file your taxes. So if you worked at any job, your employer will give you something called a T4 slip. In Quebec, it's called an RL-1. So make sure you get your T4 from your employer. You're going to get a different T4 for every job that you work at. And it's going to include a bunch of different information like the money you earned, the income tax that was deducted right away, contributions you made to the Canada Pension Plan, etc. So that's the most important thing you need to have with you. As well, if you're a student here, you'll get statements from the university. So it'll show how much tuition you paid. There's also slips that you'll get for like if you got any scholarships or bursaries, you'll get a tax slip for that as well. So make sure you're going onto like UOZone and downloading all of your tax slips. Also donations, if you donate any money, that's considered a deduction from your income. So just think of anything you did last year. If you made any donations, you can ask the organization you donated to for a tax slip so you can deduct that money. Medical fees, this probably doesn't apply to a lot of you, but if you do have medical fees, they can be deducted in some cases. Does anyone here know what an RRSP is? That's okay. So an RRSP is a type of an account that the government allows you to open to help you save for retirement. So when you open an RRSP, there's a limit that you can contribute to the account every year. When you do contribute to the account, you'll get a deduction from your income. So let's say you made, $40,000 in a year and you contributed $8,000 to your RRSP. The government is only going to tax you on $32,000, not $40,000. So it's a good way to reduce your taxable income, but there is a limit. So you have to make sure you stay within your limit. As well as statements regarding how much rent you paid, because that can affect your taxes as well. So that's about it. So we have a section here on taxes in Quebec. If anyone here is like actually living in Quebec, do you mind just raising your hand? Because or else this isn't really going to be relevant to anyone. So don't be shy. Like if you're from Gatineau, like no problem. Oh, everyone's from Ottawa? Okay. Okay, so I guess we'll skip over this because it's really just a special cases for Quebec. So if you have any questions, please feel free to like raise your hand and we can go into things in more detail if you'd like. We do have, like I said, we do have like a little Kahoot quiz to do now. So, and a survey. So if you want to do the survey and let us know how we did, that'd be much appreciated as well. Yeah. Yeah.
Donation tax, I wonder.
So in Canada, there's certain organizations that are called not-for-profit. So if you give money to a not-for-profit, let's say, or what's a good example of a charity? Like the University of Ottawa is considered a not-for-profit. So there's wealthy people that sometimes they'll donate money to University of Ottawa, and that'll be considered a charitable donation. And then they'll get like a slip that says how much money they donated, and then they can deduct that money from their income. That makes sense. Has to be like from like a registered charity or like not-for-profit, and they'll give you like a statement.
Opening RRSP cost you anything?
No, in most cases, you should be able to do it for free through your online banking.
Just the fees of investing and the taxes at the end. I have a question for you. If you haven't spent enough time in Canada for one point or the other, but you've paid the fees of university as an international student, is there any credits available on that side? Do you know? If you're not common law side or you're like under 183 days, but you still paid into the tuition, yeah, because I know the other side of things if you're a resident, but if you're not like.
So you're asking like you got a deduction in that case?
Yeah.
As far as I know, like in that case, you wouldn't be paying taxes in Canada. So
You wouldn't be.
you wouldn't be deemed to be a resident.
Yeah.
If you're not here for 183 days and you don't meet any of the criteria for the other type of resident, you're not going to be paying.
So you're just on vacation paying a lot of money.
Yeah, I mean, it's probably, well, yeah. If anything, you're missing out on a refund because like most of us here, we're not making a lot of income. So when we go file our taxes, you'll actually get money back from the government. You won't be paying them money. But yeah, I think in that circumstance, you just wouldn't file anything.
You know, if this, when you in a second year, can you go back on it? Because at that point, you'll have met the threshold.
So if
These are technical questions.
Yeah.
I know this, not financial advice.
Yeah, exactly. Yeah.
I'm just wondering if you know.
Like if you meet the 183 days,
You'll need it next year, because so basically, let's say that you don't pay your taxes 1 year, and then next year you file it, then you can kind of go back, right? Like 5 to 7 years, depending on
so
the issue
file
is.
like retroactive.
Yeah.
But you'll have to double check that.
Get advice.
Yeah.
Get advice.
I have one question. Can we open an RSP now for last year's? Can we adjust the amount if we invest it now, or will it be reflected for next year's tax savings?
It'll be for next year.
Yeah.
So the RSP deadline was at the end of February. So if you start contributing now, you'll have the deduction available for 2024.
I have another question. If, for example, we have income from another country, should we pay the tax of this for the Canada?
Yeah, so if you're a resident in Canada, you have income from another country, you have to report that in Canada.
Here, but for example, sometimes we come back to Canada, so we should pay the tax also. And we don't have any income from Canada, for example.
Yeah, well, like if you're a student here and you're here for more than half the year, you're most likely going to be considered a resident in Canada, which means that you'll have to report all of your worldwide income in Canada. Okay, so yeah.
Also, if you had income maybe for 2 or 3 years before 2020, 2021, and as I reported and filed it here, should I pay tax for that years that I haven't been here?
No, in most cases, I don't believe so. Yeah. Only when you start being a resident, that's when it starts. It doesn't like go backwards. Yeah. If you work in Quebec but you live in Ontario,
Yeah, living in Ontario, but working in Quebec.
so again, don't quote me on this. You should do your own due diligence, but I'm pretty sure in that case you're going to be a resident in Ontario, and you wouldn't pay taxes in Quebec. It's usually based on where you live. It doesn't matter where you work. It's based on where you live.
Tax rate and everything. Tax reduction based on Ontario, not.
Ontario, yeah. Other questions? Okay, well, we're gonna do a short quiz. If you think of anything in the meantime, let us know after. But yeah, do stay around. We're gonna play a little Kahoot.
Just as a disclaimer, none of this is financial advice there, so definitely see a tax expert.
Not sure.
Directly in mind.
They don't have capital gains.
I was away advance. Discuss it. If you want to know, you can ask. There.
Is it on capital
Yes.
gains? Unless it's in a TFS.
What gets added to your regular income? It's 50% of the capital gain. It's not. About like $100 capital gain, for instance, you'll add $50 to your.
the industry, the government itself.
Like if you buy it and sell it at a profit, difference that you sell it at is a capital.
The tax.
Oh, yeah. We're not experts. Like we can give you a quick overview. I'll look into that. How to do it. We'll give everyone one more minute and then we'll start it here.
Yapanlar ağaç. Ada palazada.
Up, guys.
I like it. Here there is nothing, like even if it's 1 lakh, you have to. Good thing about working
No,
here.
no, work on company. Meron.
Last payment after coming.
It's gonna go to the second. All right, congrats. We'll stick around. So we got a request to go look at a tax return. So like this is the form that's going to be submitted to the CRA when you file your taxes. So you're not okay. Most likely you're not going to fill this out. The way you're going to do your taxes, you're going to use one of the online softwares that we mentioned in the presentation, such as TurboTax, Wealthsimple. What's the other one that's popular? Anyways, you're going to use one of the online softwares, and this is going to be populated automatically. So don't worry about it because it gets pretty complicated after. But this is just for your information what a tax return looks like in Canada. So you're gonna have like all of your personal information, your social insurance number, date of birth, whether you're married, single, separated, etc. Okay. Where you live, if you came to Canada in 2023, when did you come here? If you have a spouse or common law partner, you put that here. This is just like information you're gonna need to have on you. And then there's a little thing here for Elections Canada. So if you have Canadian citizenship, they're going to ask you if you authorize a CRA, which is a Canada Revenue Agency, to give your personal information to Elections Canada, which is the organization that runs elections here. Well, there's other things you don't really have to worry about too much. Oh, this is where like all the money you made during the year is going to go. So remember how I said T4 slip? So wherever, whatever job you worked at in 2023, your employer should be giving you something called a T4 slip. And that's going to give you the amounts you need to put in all of these boxes. So you're not going to have numbers in every single one of these boxes. Most of these boxes are actually going to be blank. Okay. Like most of these are special deductions, which are not going to apply to you. The most like important ones are going to be this line right here, employment income. If you contributed to CPP, this one right here, and it tells you what box it is from your slip. So when you get your T4, you're gonna have a bunch of different boxes with numbers. So your employment income, that's like the money you made from working. That's gonna be box 14. And then the money that was contributed to the Canada Pension Plan, that'll be box 20. And all the different lines here. Again, like you don't have to do this yourself. The software that you use will do it automatically for you. You just have to have your T4 on you and put in the numbers in the right boxes. Yeah, all of this basically gets added, and then you end up with your total income here. And then that gives you your taxable income. And then we talked about deductions, right? So deductions are going to reduce your total income. So these are all the different things that can reduce your income. So we talked about RRSP, so Registered Retirement Savings Plan. If you contributed to that, you're going to put that amount here. FHSA is a new account for first-time home buyers. If you contributed to that account, you will get a deduction as well. Once again, there's a lot of different ones that won't apply to you, but this is just for your information. So yeah, that's going to give you your total net income after deductions. And then there's another step to calculate taxable income. So this is starting to get a bit technical, but there's like other ways that you can reduce your income. So if you sold investments at a loss in a prior year, you can carry that forward in some cases. So eventually you're going to have a taxable income amount. So that is the amount that the government is going to tax you on. And then remember how we talked about the different income chunks, like $0 to $5, you pay 5%, $5 to $10, you pay 10%, etc. So these are like the actual income chunks for the federal government. Okay. You have to remember this is only the federal government. There's going to be additional tax from the provincial government. So from 0 to 53,359, you're going to be taxed at 15%. And then between 53,000 and 106,000, you're going to be taxed at 20.5%, and so on. Okay, so then and then you calculate that amount, so the amount you pay, and then you're going to have your different credits. So the credits are going to reduce the amount that you pay. So everyone gets a $15,000 deduction or a credit, basically. So the first $15,000 of income that you earn is going to be tax-free. And then there's other credits that you can get as well. So if you have a dependent, you'll get a credit. So then these are non-refundable tax credits, which means they won't give you a refund. So basically, like these ones will reduce your income to 0, but they won't ever give you a refund. Okay. There's so many different ones, and again, going back to like the software which you're going to use to file your taxes, it's going to just like ask you a bunch of questions, and it'll determine whether or not you're eligible for any of these deductions. So don't worry too much. So it's going to give you a total here of your non-refundable tax credits. And then it's going to combine everything, calculate the total federal tax. And then at the end here, you'll either have a balance owing, so a balance you have to pay to the government, or a receivable, which means that you'll get a refund. And in most cases, you will get a refund. So that's it. I know it might be overwhelming, but yeah, like I said, I wouldn't worry too much. Do you want to play we'll show you like a quick video of one of the softwares you can use to file your taxes, and that'll make it seem a lot easier. So, yeah, I'll just So that's just like one of the different softwares you can use. I'm not telling you this is the best one, but it's one of the options you have. I used it this year. Like I filed my taxes and I think it was like $15 to use it, so it's not too bad. And it's really straightforward. So it's just like how the video shows it. It'll just ask you questions like, did you come here in 2023? How much money did you make? It's very like step by step. You don't have to know anything about taxes or accounting really. So I would highly recommend using one of those softwares. Don't try to fill out that form I showed you before by yourself. Even if you're like a tax expert, it gets really complicated. So definitely, I would highly recommend using one of these. And yeah, I don't know if there's any other questions, but. Yeah,
Thanks for attending.
was helpful. Yeah.
That's all we have.
I found too many work days. This is my thing, but I have to take a. I told you.
For us, it came.
I don't know the exact amount.
I got my T4 and even university gave us T4, right? Or T2000 or something.
I need to download that from the university.
I'll call you.
Spouse.
I'll sit with Anish
This
one day.
weekend.
No, not this week. Hopefully when we are all free. We have time till April end. We can do it early, but depends on our submission.
Okay.
What is that?
Bro, we have 3 subjects this term. And BCI, bro, tell them presentation. Tell them presentation. I have to. My team is the worst, bro. I don't know why. Like here, all the teams are worst. Even BCI and that PSR skills. That, but still, we had the Jonathan there. And that, I now realize the importance of Jonathan. Oh my God, we need Jonathan.
I don't know how well I can do this because the expert.
I will go to
But still, we need some.
coming. Yes.
I'll talk to them.
Yeah.
Yeah,